Let's get right to it. Wall Street is buzzing, and the excitement is impossible to ignore. Marvell Technology, ticker MRVL, is the talk of Wall Street. The company's name is lighting up trading floors and financial news feeds everywhere. Analysts are pounding the table. This is a strong buy consensus, with price targets soaring as high as $105. The optimism is palpable, and the numbers back it up. Barclays' Thomas O'Malley, a proven pro with a track record of spotting winners, is leading the charge. He's issued an overweight rating and set an $80 target, signaling major confidence in Marvell's future. O'Malley isn't fazed by the short-term noise or market jitters. He sees Marvell as a foundational supplier in the AI revolution, powering the next generation of smart technology. Even a recent dip in the stock price is being viewed as a golden opportunity for bold investors. For those with vision, it's a chance to get in before the next wave. The market's volatility is just creating more entry points for those who believe in the long-term story. Sure, Bank of America is taking a more cautious stance, downgrading to neutral due to concerns about near-term AI growth. They're urging investors to be patient and watch for clearer signals. But in a story this big, playing it safe could mean missing out on a major move. Sometimes hesitation is the real risk. The ongoing debate between bulls and bears is your chance to buy a top AI player at a discount. When opinions are split, opportunity knocks. Bottom line, the consensus is clear. Marvell is a winner. The momentum is building and the smart money is taking notice. The smartest minds in the business see a bright future, especially as Marvell's chips become essential in AI data centers. Near-term turbulence? Just noise in a much bigger story. The real story is Marvell's ascent in the semiconductor world. As AI transforms industries, Marvell is positioned to ride the wave. Booyah! On August 29, 2025, Marvell stock shocked Wall Street by plunging nearly 19% in a single trading session. It was one of the steepest single-day drops the company has seen in years, leaving investors and analysts scrambling for answers. So, what triggered this dramatic sell-off? Oddly enough, Marvell reported record Q2 revenue of $2.01 billion, an impressive 58% jump year over year. They also met Wall Street's earnings expectations, which would normally be cause for celebration. But this time, the market's reaction was anything but positive. The trouble started with the data center segment, which slightly missed expectations, $1.49 billion versus the anticipated $1.51 billion. While this shortfall was minor, it was enough to raise eyebrows among investors who were hoping for perfection in a red-hot sector. But the real blow came from Marvell's Q3 revenue guidance. The company projected $2.06 billion, falling short of the $2.11 billion analysts had penciled in. This lower outlook signaled to the market that growth might be slowing, at least in the near term. That guidance spooked investors, especially those banking on relentless growth in the AI and data center markets. Any hint of a slowdown in these high-flying sectors can trigger outsized reactions. Fast money traders, always on the lookout for weakness, bailed at the first sign of trouble. Their rapid selling only accelerated the decline, creating a feedback loop of fear and falling prices. To make matters worse, Marvell warned of a temporary dip in its custom AI chip business for Q3. Even though management reassured investors that a rebound is expected in Q4, the immediate outlook was enough to rattle nerves. Instead of focusing on the positive news about a likely rebound, the market zeroed in on the short-term dip. In times of uncertainty, bad news tends to drown out the good. A slight miss in one segment, softer guidance for the next quarter, and a temporary slowdown in a key business line. These factors combined to create a perfect storm for Marvell stock. Panic selling took over, and the stock paid the price. But was this reaction truly justified, or did the market overreact to short-term headwinds? Let's dig deeper and find out. Was that 19% drop really deserved? Not even close. The so-called guidance miss? Marvell sold its automotive Ethernet business early, pulling $60 million out of Q3 revenue. Add that back, and guidance actually beats expectations. The market punished a strategic move that makes Marvell a more focused AI player. The data center miss? The segment grew 69% year over year, hardly a red flag. Custom silicon business is lumpy by nature, with revenue timing tied to massive projects. The Q3 dip in custom AI chips? Management said it's just timing, with a big Q4 rebound coming. These are multi-year design wins, not one-off sales. Smart investors see the dip as a setup for bigger gains. This wasn't a warning sign, it was a buying opportunity. The market overreacted, plain and simple. The real reason to own Marvell? It's not just about their stock performance or market presence. It's their pivotal role as a custom silicon powerhouse in the rapidly evolving AI landscape. Marvell is at the heart of the data center build-out, supplying custom chips to tech giants like Amazon and Microsoft, ensuring they stay ahead in the tech race. The data center segment now makes up nearly 75% of Marvell's revenue, a massive shift that underscores their strategic focus. Marvell is laser-focused on AI, shedding slower growth businesses to double down on custom silicon, which is crucial for AI advancements. Their pipeline is booming with over 50 new design opportunities involving more than 10 major customers, showcasing their innovation and market demand. Each design win translates to long-term sticky revenue, creating a stable financial foundation. As these programs ramp up, growth will accelerate, smoothing out any short-term bumps and ensuring sustained progress. Marvell isn't just a supplier, they're a strategic partner, embedding themselves deep in customer infrastructure, which is crucial for long-term collaborations. Once a hyperscaler builds around Marvell's technology, switching becomes incredibly tough, ensuring customer loyalty. This creates a powerful competitive moat, protecting Marvell from competitors and securing their market position. Marvell is helping shape the very foundation of the AI era, driving innovation and setting new standards. That's the kind of position you want to own. The future is now, and Marvell is leading the charge. Marvell's not just about custom chips, it's also about high-speed connectivity. Their optical solutions are the superhighways moving data between AI chips at lightning speed. As AI models grow, demand for faster data transmission explodes. Marvell leads in high-speed optical modules powering the backbone of modern data centers. Every network upgrade is a chance for Marvell to sell more high-margin tech. This recurring revenue stream grows with AI demand. Their advanced optical DSPs are essential. Without them, data centers grind to a halt. Marvell's holistic approach, custom chips plus connectivity, sets them apart. They're enabling the entire AI data center architecture. That's a winning formula. Great story, but do the numbers work? Absolutely. Q2, revenue $2.01 billion, up 58%. Net income swung from a $193 million loss to a $195 million profit. Marvell is turning growth into real profits. After the drop, the stock trades at about 22.7x forward earnings, a bargain for an AI leader. The market's panic has created a long-term opportunity. Marvell generates over $1 billion in free cash flow, with healthy 50% gross margins. Debt is manageable, with $1.2 billion in cash and strong cash flow. This is a financially sound company fueling a massive growth cycle. Explosive growth, profitability, reasonable valuation, and strong cash flow. The numbers back up the story. The recent sell-off disconnected price from fundamentals. That's your invitation to buy before the market catches up. This is real value, don't miss it. Let's talk risks. Marvell relies heavily on a few giant customers, mainly Amazon and Microsoft. If one delays or switches, revenue takes a hit. Management is working to diversify with 50+ new design opportunities, but concentration risk remains. Competition is fierce. Broadcom is the top rival, and hyperscalers are building in-house teams. Marvell must constantly innovate to win and keep design slots. One misstep could cost them a key customer for years. The fight for market share is intense and unforgiving. While Marvell is landing punches, the battle is far from over. These risks are real, and you need to weigh them. High reward comes with high stakes. Know what you're buying. Insider selling can spook investors, but context matters. Executives sell for many reasons: diversification, taxes, or pre-scheduled plans, not just company outlook. Look for patterns, not isolated sales. More importantly, don't get distracted by short-term market noise. The 19% drop was a knee-jerk reaction to headlines, not fundamentals. The market often votes on fear, not facts. As a long-term investor, focus on the weighing machine, not the voting machine. Ignore the noise, trust the fundamentals. Marvell's role in AI is real, and the recent dip is mostly just noise. Stay focused on the big picture. So is now the time to buy Marvell? In my view, absolutely. The market's short-term panic has created a rare entry point for long-term investors. Marvell is at the heart of the AI revolution, with a bursting design pipeline and explosive financials. You're buying a leader in a secular growth market, not a cyclical bet. Risks exist: customer concentration, fierce competition, and volatility. This isn't a sleepy stock. It's high growth, high stakes. But the potential rewards far outweigh the risks. Buying a key AI enabler at a forward PE in the low 20s is a rare opportunity. The chance to double or triple your money over the next few years is real. The recent sell-off was a gift. The Wall Street consensus is strong buy for a reason. Do your homework, know the risks, but have conviction. Buy Marvell, buy it now. Booyah!